Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Thanks for tuning in to Modern Investing Techniques, episode 58. Today is May 30th, 2026. I'm Patrick, broadcasting from Vancouver. Here's your daily market intelligence and today's practice trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Record 10-day Bitcoin ETF outflows totaling nearly $3 billion create a potential contrarian entry point for crypto allocation inside a TFSA. Markets closed modestly higher today. The S&P 500 finished at 7,580, up 0.2%. The NASDAQ Composite closed at 26,973, also up 0.2%. The TSX Composite rose 0.7% to finish at 34,769. Sentiment stayed cautious, with geopolitical tensions around the Strait of Hormuz and mixed inflation signals still in focus. 14 days ago, we simulated an APO position on a 15 times adjusted net income valuation, with 15% projected organic growth. That name closed down 1.81% today, showing how quickly rotation can erase a value setup even when the fundamentals remain solid. Investors should watch volume on any rotation into tech or energy names next week. Now let us turn to a strategy that spreads risk across developed Asian markets outside China. Hong Kong's Hang Seng remains far below prior peaks because property sector liabilities exceed $300 billion, and regulators have cracked down on major tech names. In contrast, Japan's Nikkei, Taiwan's market, and Korea's Kospi have all hit or approached records on AI and semiconductor strength. One practical way to implement this idea is to allocate a sleeve of a TFSA or RRSP to a broad Asia ex-China ETF or to individual holdings in Japanese and Taiwanese semiconductor supply chain names. Rebalance the sleeve quarterly using the 200-day moving average as a guide. This approach worked best during the 2015 to 2016 China slowdown and the 2022 global rate hike cycle when markets with clearer policy predictability outperformed. The main risks are currency fluctuation and slower overall GDP growth in the region, so keep the position under 10% of the equity sleeve. That geographic approach pairs naturally with today's investor education topic on how stagflation changes central bank behavior. Imagine you added a broad equity ETF last month, expecting the new Fed chair to cut rates on any growth slowdown, only to watch the 10-year yield spike instead because inflation and weak growth arrived together. The mechanism runs through the Fed's dual mandate. When consumer spending edges up only marginally, while the saving rate hits a 4-year low and war-driven price pressures persist, the central bank faces a credibility test because traditional rate cuts would fuel inflation further. Professionals always check the personal consumption expenditures deflator and the saving rate before assuming policy easing. Those two data points together determine whether the Fed can ease without breaking its inflation target. The biggest mistake with stagflation setups is assuming the Fed will prioritize growth over price stability the way it did in 2020. Instead, always model two scenarios, one with 50 basis point cuts and one with hikes, before sizing any duration or gross stock exposure. Now to the practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved. No new weekly hold was opened today. The AI analysis found no semiconductor supply chain names meeting both volume and sector criteria at the same time. Capital remains in cash, earning overnight rates, while we monitor 20-day average volume on names already trading above their 50-day moving average. Skipping the trade when volume confirmation is absent preserves capital and reinforces that the first loss avoided is often the cheapest outcome. Listeners learn that discipline around entry filters matters more than constant activity. Yesterday's flash trade on SNOW entered at $237 at the market open and exited at $239.20 at the close. The position gained 0.93% for a simulated profit of $9.28 on a $1,000 stake. The NASDAQ rose 0.2% over the same session, so the trade delivered 0.73% of positive alpha. The quick intraday gain showed the benefit of pairing a revenue beat with a major partnership catalyst. Yet the modest size of the move reminds us that even positive catalysts can be absorbed quickly without sustained follow-through volume. The rule extracted from that outcome is to always require volume confirmation above the 20-day average before entering momentum trades on partnership announcements. Benzinga Pro's real-time scanner lets users filter for stocks under $20 or under $5 with options flow and earnings date overlays. Canadian investors can use it to surface names that meet custom valuation or momentum screens inside a TFSA. The 14-day trial removes the paywall on the full scanner and news flow. Interactive Broker's Trader Workstation API connects directly to custom Python or Excel models. Users can pull live options chains and fundamental ratios for semiconductor or energy names without manual data entry. This edge matters for investors running weekly screens who need to automate position sizing and stop levels. The platform is available to any account holder at no extra cost beyond commissions. Hanwha Aerospace is eyeing new arms deals with Germany and the United Kingdom as defense spending surges from conflicts in Ukraine and the Middle East. Add the name or a broad industrials ETF with defense exposure to the watch list for any pullback below the 50-day moving average. Wolfspeed has posted sharp gains over the past month on silicon carbide demand, even after a recent sell-off. Trim any existing position if it closes more than 8% below its 20-day moving average to lock in gains. Alaska Air shares popped higher this week as airlines show evidence of working through a difficult cost environment. Add the name to a consumer discretionary watch list, but wait for a retest of the 50-day moving average before adding. Spot Bitcoin ETFs have now seen 10 consecutive days of outflows totaling nearly $3 billion. Consider a small satellite allocation to a spot Bitcoin ETF only after the next 5-day volume average exceeds the prior 20-day average. The simulated portfolio has completed 29 trades with a 62% win rate. Cumulative profit stands at $416.37. Average return per trade is 1.44%. The best trade gained 20.11%, while the worst lost 11.35%. The current streak is 2 wins. Our AI analysis is learning from patterns around volume confirmation and catalyst follow-through, and is adjusting entry filters accordingly. Before we wrap, open your brokerage platform, pull up any semiconductor ETF you own or are watching, and check whether today's volume exceeded the 20-day average. If it did not, note the current distance to the 50-day moving average as your next potential entry trigger. Tomorrow, we will look at how the same volume filter applies to a fresh set of semiconductor supply chain names. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about